what I'm going to propose, I'm going to myself, having listened to that very interesting contribution, pose a few questions, question and answer here, and then open to an exchange of views and okay, questions from all of the participants. You have more than once in the course of that fascinating lecture criticised quantitative easing and hyper low interest rates. You used a very interesting phrase that it was like becoming addicted to drugs. And anyone who knows anything about drug addicts who are coming off drugs, as the Americans say, to do cold turkey, is that they suffer from serious withdrawal symptoms. Talk to us about what would the withdrawal symptoms look like if we were coming off the drug treatment.
Well, I can't describe you because I don't have personal experience with drugs, yeah. Which prevents me from using this metaphor. But more abstractly, I would say the choice is probably between having a little of a recession in the shorter run versus having much deeper problems in the longer run, like it is with the drug addiction. It would be very good if there was a wave of new technology raising productivity, but we cannot plan it, and we should not wait for it. But I think this is the basis of the choice. Now, I think what is underestimated is the potential of well-structured packages of structural reforms to increase spending, which depends on confidence. Now, if you buy bread, it's not a confidence spending. Okay? You have to have a bread. But if you invest, then it's based on confidence because you want to have a reasonable certainty that you will not lose your money. And there's a lot of uncertainty created, I think, by policies. And by the uncertain prospect, how would this end? So I cannot be very precise, and I think nobody can be very precise. I think so. We don't have even the economic models for which economists have, some of them have obtained Nobel Prizes, turn out to be very bad. Why, I mentioned? Because they completely ignore the supply side. Meaning that regardless of monetary policy, the supply side of the economy, the growth of the economy dictated by this, remains the same. While it can be shown, at least tentatively, larger and longer doses of this unconventional monetary policy weaken the supply side via weakening restructuring and reforms. So if you assume away your main problem, you don't see problems.
Well, let me ask you a variation on that theme. If Mario Draghi was sat here and listening to this prescription, and he thinks this guy Balcerowicz is onto something good, but he looks at the Fed that continues quantitative easing, he looks at the Bank of Japan that continues, he looks at the Bank of England that with Brexit deepens quantitative easing, can he really get out of this circle, whether it's virtuous or vicious, without creating collateral damage, precisely because the others still play the game?
Well, I mentioned that the main culprit in my mind is Federal Reserve Board, because they started it, they spread the gospel, they pressured other banks, not Japan because Japan started earlier, but they ended. They are on the exit side already. They start to exit hesitantly, but they start to do it. So at least them, from their point, from them. I don't think Japan matters very much for Europe. It's too small. It's large, but too small. There are only two global countries in the world, US and China. By the way, I did not mention problems of China because I didn't want to depress you.
Let me ask you then, you talked about the growth rate in the United States being better than in Europe, but less than it used to be. So how would you make America great again?
Well, I tell you after elections. I think it's premature. And besides, as you know, there are hundreds of good economists. They preach certain policies, for example, absurd tax code in the United States, which is absurd. So it's not an intellectual problem. Few people know that it's over-regulation in the US at the state level. There are more regulations in some states of the US than in Scandinavia. In Scandinavia, you have more free markets than in the US, in some parts of the US. There are more reforms in education in, let's say, Sweden than in most parts of the US. In Sweden, at least what they introduced under the former government was a voucher coupon, which allowed private schools and private enterprises to compete for the budgetary money. This was blocked in the United States. So there is the tendency for over-regulation at the state level in the US, and probably independent reduced competition. That's surprising, but it seems to be happening. And this tends to lower the growth.
You mentioned, and you showed some interesting data to confirm that the forecasting models used by the likes of the IMF have systemic weaknesses because they keep getting the wrong answer. And we know that Donald Trump doesn't like bad models, so what would you do with the IMF model?
But this is not on the IMF, most of the institutions. Now, errors are normal. But if you have errors on both sides, not systematic, yes? No, I meant systematic errors, exactly. On the same side for 9 years. These signals suggest that something must be wrong with the models, and my view is that these models capture only the demand side regardless of the supply side, so they are incapable of measuring the negative impact, including of this long-term unconventional monetary policy, and perhaps but certainly that, first of all.
Let me turn, if I could, you mentioned an interesting point. You're not the only person to have mentioned such a point as regards whether Greece should ever have been in the euro. Oh. But in the early years of Greece in the euro, some of the effects of its fiscal deficit were hidden from public view because Goldman Sachs had helped it to re-engineer some of its current expenditure into off-balance sheet debt, and so it was technically hidden for some period. Whether they looked very hard in the statistics office to find it, I don't know. But at a moment when it was revealed, we discovered that the Greek debt, instead of being 4% of GDP, was finally, after 3 different revisions, about 14%. So you were strong in fighting populism. What about people having tricky banking engagements with key clients like that add in some way to systemic problems because they hide them away?
I am not defending them. Neither I am defending the Nobel Prize laureate, Mr. Stiglitz, who has been advising Greek governments, and he's been defending this populism until this day. So why should he be advising and selling bad policies? I am not trying to defend in this way by attacking Mr. Stiglitz. I am not defending Goldman Sachs, God forbid. But the populism in Greece, it is not about Greece's national character. Because if you look at their record on policies, they have very good on policies, fiscal discipline, more or less competition until, I think, the 70s. And then something bad happened. And the something bad was the name of Papandreou, father. And he was ultra-populist, very successful. By the way, he was a professor from Berkeley of theoretical economics. It's a very dangerous person. Theoretical economics is contradiction in terms. But his passion was populism. And if you look at rate of growth under Papandreou for 15 years or more, they were very low compared to the previous period, but he has winning elections because he was blaming European Union. By the way, this is very dangerous. Have you noticed? I have forgotten that some politicians are blaming the results of their own bad policies on European Union. This should be unmasked. For example, and they demand more stimulus. They do not mention structural reforms. There should be a systematic demascation of such populism.
Well, there's no doubt that blame it on Brussels syndrome, and in general, seeking to externalise blame is part of the toolkit of contemporary politics.
Blaming European Union and blaming the Germans, with the undertones referring to the Second World War, etc., as though it was an argument in economic debate, which is not. Okay.